What's up, guys? My name is Pete, and I'd like to welcome you to another edition of Phipps Tips. In today's episode, we're going to take a look at the overall market. We're going to check out its top performers. We'll have a look at today's biggest winners and the biggest losers. We got a news article today, guys, decentralizing popular dApps. Scaling isn't the only problem, guys. Isn't the only problem. And then we've got a little bit of technical analysis on Bitcoin. So if you guys are new here, go ahead and hit that subscribe button as I try to post a video every single day, Monday through Friday. And if you are a returning viewer, hit that like button, guys, and we will get this party started. Stay tuned. We're on CoinMarketCap.com, and the market cap currently sitting at $246.9 billion with a 24-hour trading volume of $9.6 billion. And Bitcoin dominance checking in at 42.5% on the day, guys. Of our top five, Bitcoin down 0.37%. Ethereum down, or up, Ethereum is up 0.5%. Ripple down 1.74%, Bitcoin Cash down 1.76%, and EOS is down 2.89% on the day, guys. Just a little bit of sideways action back and forth. We're going to check out the movers and shakers versus Bitcoin. Today we have Mithril up 32% against Bitcoin, Ethos up 19.62%, Augur up 16.91%, Game.com up nearly 12% against Bitcoin, and Digibyte up 8.35% against Bitcoin today, guys. Our biggest gainers and our biggest losers of the day, we have FutureX up 77.81%, Whalecoin up 56.83%, Starcoin up 56.47%, MyNextCoin up 55.37%, and Selfkey up 53.83% on the day, guys. Selfkey being a coin, oh gosh. If I can remember the article that Selfkey was about, it'll come to me. We're checking out our biggest losers, and our biggest loser of the day is Sense, down 63.77%. Linker Coin, down 25.76%. XYO Network, down 20.87%. Sharp Platform Token, down 20.67%. And Dignity, down 20.46% on the day, guys. So that'll do it for our gainers and losers on the day. We are going to check out our news article. You guys sit right there. I'll be right back. Decentralizing popular dApp isn't just a scaling problem. It's no secret that building large-scale, fully decentralized applications is a challenge, but it turns out the hurdles have to do with more than just scaling. Decentralized application, or dApp, developers frequently hit roadblocks. Since Ethereum, the go-to platform so far in dApp's short history, can process only around 25 transactions per second, and the more transactions the network is asked to handle, the more each one costs the user. These limitations on transaction throughput are commonly referred to as scaling limitations, and everyone from the casual dApp user to the founder of Ethereum, Vitalik Buterin, is keenly aware of them. So, when a particular dApp turns out to be less than totally decentralized, with parts of the software running on centralized servers, say, the solution seems obvious. Speed up transaction throughput and reduce costs, and pure, blissful decentralization will naturally follow. Turns out, though, things aren't that simple. Some of the most popular dApps that currently live on Ethereum, which right now fall into one of two categories, either an exchange or games, often retain centralized features, but the reason have little to do with throughput and instead revolve around the user experience. Take games, for instance. For developers to be able to make updates to a blockchain-based game, they typically put backdoors into the smart contracts. Otherwise, says Jim Duffy, a co-founder of the Loom network, which developed Ethereum-based dApps, includes a Q&A site called Delegate Call. Developers would only be able to deploy their dApp once and never be able to modify it. Obviously, if you're a player in the game, you want the developers to be able to update it. You want them to be able to fix bugs, add new levels, add new features, that sort of thing. Which is absolutely true, guys. In the gaming space today, no one is buying a game that doesn't expect more of that game to come later. Like, be it through downloadable content or, just in-game things that are happening, like events in the game that are happening. Everybody wants more bang for their dollar when it comes to gaming. So, on the other hand, the decentralized exchanges, or DEX, keep some centralization in their processes as it relates to their order books. The reason for this approach have to do partly with security and partly with the difficulty of assembling a reliable order book across a large distributed network of computers. And while most of these dApp projects aim to decentralize further in the future, for now they're happy to work slowly through that process so that users have the best experience and don't lose money. Duffy told CoinDesk, "No one's ever built a complicated app and then launched it and it just worked perfectly on day one." And he's absolutely right there, guys. With technology, the more technologically advanced we get, guys, there's bugs that need to be worked out. And, you can't expect a developer to have everything hammered out day one. It just doesn't happen like that anymore, guys. The backdoor dilemma. CryptoKitties was the first decentralized application to gain widespread attention and a significant user base. It didn't take long, however, for critics to notice that the game is not as decentralized as it initially seemed. After Loom Network co-founder Luke Zhang wrote about the backdoors in the CryptoKitties code, which allows the company behind the game to pause it entirely or alter its closed source breeding algorithm. While the CryptoKitties team contends that keeping the breeding algorithm a secret makes the game more fun, this choice does mean users have to trust the company itself not to tweak the algorithm in a way that would undermine the market's pricing of kitties, some which are very rare and in turn are very expensive. Another piece of the CryptoKitties game that was under the company's control until very recently was the art assets. Without these, a player would still own that kitty they paid 250 ether for, but instead of being able to admire its green eyes and Himalayan orange soda-colored fur, they'd have to admire the number sequence encoded in the non-fungible token that's the core of the game. 99AC55A6447G. There's a huge code there, guys. Cute, right? But according to Duffy, without this centralized control of the art, developers and players might abuse that privilege. What happens if someone uploads something illegal, like child pornography or something? The nodes would have to have a way of censoring that to remove that data, or it would just be a complete free-for-all. And yet, CryptoKitties seems to be ready to take somewhat of a chance on this. On June 26th, the company known as Axion Zen announced that it had updated its terms of service, making it possible for third-party applications to use CryptoKitties art. And not only that, but it was open sourcing the ownership rights of the non-fungible tokens. Still, it's a far cry from complete decentralization, and Duffy acknowledged that there are potential pitfalls in CryptoKitties' approach to its business model. But he said that the launching a semi-centralized dApp and decentralizing it over time is pragmatic. Kyle Samani, the managing partner of Multicoin Capital, echoed Duffy's statement, saying, "Decentralization is generally a spectrum." He called criticism of CryptoKitties' centralized aspects nitpicky. Duffy held out hope for more complete decentralization, though. For instance, he argues that Loom Network's approach, building a dedicated, scalable sidechain for each dApp and pegging that chain to Ethereum, would enable full decentralization without having to settle for fossilized games that never add new levels or features. Updates could be made through hard forks, assuming players could come to a collective agreement. Making a prediction, Duffy said, "We're going to see actual real fun games that are normal games that people want to play, except they're actually owning the in-game assets that they can do this on a fully decentralized platform." Now, the order book rules and the order book blues. Centralized exchanges have been cryptocurrency's Achilles heel since the early days of Bitcoin. Mt. Gox being the most famous example of what can go wrong when transparent decentralized ledgers meet opaque centralized intermediaries. For this reason, advocates of decentralization have long tried to build distributed alternatives. Examples on Ethereum include IDEX, and Fork Delta, which according to DApp Radar are the first and second most trafficked dApps over the past 24 hours. The only problem is that both of these exchanges use centralized order books, as do most of their peers, according to Tariq Lewis, a veteran cryptocurrency developer who is building DEX technology, codenamed Lyra Protocols for now. These centralized order books, which collect bids, or prices offered by buyers, and asks, prices offered by sellers, to facilitate trades, are the norm in traditional markets. Despite strict regulation, however, shenanigans abound on the traditional exchanges. Spoofing, front-running, and layering are just a few of the illegal tricks traders use to take advantage of each other, and this behavior is prevalent, if not worse, on crypto exchanges. Unregulated centralized order books are manipulation havens, said Lewis. A person familiar with DEX, however, DEX operations, who asked to not be named, added that some exchanges see order book decentralization as a way of avoiding regulatory interventions. Exchanges operating centralized order books must either register as alternative trading systems or avoid listing securities, which, as is becoming increasingly clear, many crypto tokens are. Decentralizing order books, however, is anything but simple. Traders need a main order book that is visible to everyone, Lewis said, and ensuring that everyone sees the same bids and asks without a central intermediary is an unsolved problem. He continued, "It's not trivial. A lot of these things folks have been working on for decades, well before the blockchain." Adding to these technical difficulties, Lewis said, decentralized order books can be easy targets for Sybil attacks, whereby one user or group of users creates hundreds if not thousands of identities in an effort to spam the network with info. Still, exchanges such as IDEX and Fork Delta have said they plan to decentralize their order books when the technology enables them to do so. Lewis did not want to reveal too much about Lyra Protocols, but said the project was looking into attack-resistant distributed order books. And Duffy said the number of DEXs have reached out to Loom Network wanting to take advantage of dedicated sidechains for the purpose of decentralizing more of their processes. As such, Duffy expressed confidence, saying, "Give it a couple years and I'd say it'll definitely be the case, just because it's possible, and if users demand it, then someone's going to fill that demand." So guys, what do you think? Do you think that scaling is just the only issue? I don't believe so. Like this guy says, it's really cool to have a decentralized app and a decentralized, exchange, but all in all, what really is the major use case for it? Decentralized games, for the most part, are, they're kind of lame. There's nothing too complex about them. And for the most part, they're just mobile games. I have yet to see, a console game that is decentralized or, on the blockchain. And if that were to ever happen, guys, I think there would need to be like a console that could handle that sort of tech. And as far as I'm aware, there is not a console that does anything like that yet. As far as exchanges go, decentralized exchanges, while, they're trying to stick it to centralized exchanges, decentralized exchanges are very slow in what they do, guys. They take forever to transact a transaction. And half the time, I'm afraid when I'm using a decentralized exchange that I've lost my money. Like, it takes literally 40 minutes. I'm like, geez, that's That is crazy. A crazy amount of time, you know, to have your transaction processed. 40 minutes. I'm like, get out of here. But I'd love to hear what you guys have to think. Has anyone played CryptoKitties? Any of you guys out there? If so, let me know what you think about it. Is the game fun? I was reading that, you know, some of these kitties that are bought on this game like cost serious amounts of money, like 250 ether. That's insanity, guys. That is insanity. I don't think I'll want to own a digital cat that's going to cost me upwards of $12,000. No, thank you. But I'd love to hear what you guys have to think. Leave me a comment down in the comment section. Let me know if you own any of those crazy rare CryptoKitties, and if so, how much did you pay for it? I'm just interested in hearing, you know, some of these horror stories. But guys, we're going to move on into our technical analysis on Bitcoin. Hang out, and we'll get right on into it. We'll be right back. And here we are, guys, on the Bitcoin versus US dollar day scale using the Bitfinex exchange information. And as you can see, we still have all our indicators and drawing tools up from the video we did yesterday. I'm going to turn on auto and turn it off again real quick just so we can get a good zoom in here. See what we can see. And as we can see, guys, Bitcoin is still just chugging along to the right. We currently are sitting just above this trend line here, this line of support. And, you know, it's a good sign. It's a good sign that we haven't had a breakdown yet. The next couple of days, I would say at least by the 4th of July. 4th of July, we will know exactly what is going on with Bitcoin, whether it spikes in price or whether it's going to dump even further. In my opinion, guys, I honestly feel in my bones that we have not seen the last of this bear trend. We have not seen the last of it at all. We can see, like, we're still in this downward channel. You know, we're not breaking through the bottom trend, but we're also not breaking up out of the channel and into like no man's land. We're just constantly staying within this little bit of an area. But as I stated in the last couple of videos, guys, if and when we do break out, we will have all sorts of resistance to fight through. All sorts of it. But, you know, we're currently working on like all new lows for this part of the year. And we can see what we can see here, that it's just, you know, trending sideways right now. No real big movements in price. What we can see, I want to remove these little drawn in lines that I've got here. Oh, we're going to do it like that. There we go. That one's gone, and now that one's gone. We can see that the 50-day and the 200-day are still both trending down. They are still both in the wrong position. If we want to see any bullish sentiment at all, guys, we will need to see the 50 overtake the 200. Meaning that, and that's the way it should be, guys. Like the faster moving averages, if we are in an upward bullish, you know, bullish market, the lower of the moving averages, like the 50-day, will be above the 200-day. And that's just because the price action for 50 days should be much higher than the price action over the last 200 days. And that's just because we have less days to work with. But since we're in a bearish trend, you know, the price is down more on 50 days, meaning that over the past 50 days, the price is less than what it has been over the past 200 days. And that's where you get the moving average. And the exponential is what that takes into account, guys, is like the wicks. You see all this price action that, like, Let me zoom in here on this one. This red candle right here. On the 24th of June, which was like 3 or 4 days ago, you can see how there's this big long wick there. That is price action on that day. And that's what the exponential moving average takes into account. It's not just a set amount on the candle. It takes into account, all the trading that went on during that day. So what we can expect here, guys, if we just keep moving to the side, that's what I'm expecting until we get to see at least a little bit of volume. What I'm going to do is check out our volume indicator. We're going to put it up right now. And we can see that the volume is starting to dwindle off. We can see from back here, it's just lower and lower and lower and lower and lower. Now, guys, a lot of these, I've been looking at a lot of people's ideas that they've been posting here on TradingView, and a lot of people seem to think that we are past the capitulation point of people leaving the market, and we're in a depression mode right now, meaning that people are starting to hate this asset and they just want out completely. They don't want any part of Bitcoin or cryptocurrency at all anymore. And that's why we're seeing this really low. Now, if you were to take Warren Buffett's advice and keep it in mind where he said, buy when there's blood in the streets, this technically, if you're going by, what other traders have to say and like their professional opinions, and there's a lot of traders that I listen to, guys, and a lot of them have said this is the time to buy. I don't fully believe that. I think we have a little more downward sell pressure to go. I feel like we're going to test the 5,000 area before we actually see that upward shot. So that's just something to keep in mind, guys. We'll grab our drawing tool here, and yeah, I feel, and I'm by no means a financial advisor or a professional financier. This is not to be taken as financial advice or trade advice. This is just for information and educational purposes only. But that being said, guys, I feel like we are going to break down out of this. This bearish momentum that we've got going on here, there's really no sign of it's, beginning to stall. So the next couple of days will be like what tells us what's going to happen. And if what happens, how I feel that it's going to happen, we are going to have a break to the downside. And we're going to test, I'm going to delete that line because that went a little too far. We're going to test right around this area, this right here. And if Bitcoin holds that area, we can expect a huge jump in buy volume, which will probably send us, if all things go according to plan, will send us into our bull run, which hopefully will take us into like the 12, 13, 14K over the next several months. Now, with that being said, there is still, in my opinion, guys, pent up sell pressure. Meaning that, not everybody has been shaken out of Bitcoin that needs to be shaken out of Bitcoin. And what do I mean by that? I mean, the get-quick-rich investors who saw it back in, early November or mid-November, December, that thought, oh man, I'm going to be living the Lambo dream. I don't think that's going to be the case, at least not this month, and probably not next month. Next month, I feel like we are going to start moving upward again. like we did here in April and on into May. But as you can see, guys, that run was short-lived, and we've been in a downtrend ever since. Since what, May 9th, May 6th, we took the fall, and we have not made a new high of $9,000 yet. It just keeps going down, dipping further and further and further. And like I said, guys, I'm expecting like the 5K range right around in here will be our bounce off point that sends us into our bull market. That's just what I've gathered from a lot of technical analysts over the past couple of weeks, listening to what they have to think about Bitcoin. They're a lot more experienced than I am, guys, so I take their advice a little more to heart, I should say. A little more to heart. But guys, this is the information that I see here, and this is what I'm going with. I feel like I'm not going to be buying anything until we actually have a confirmed bottom. And right now, guys, if you are paying attention to any of your favorite coins, they're down so much right now. One of my favorite coins, it's an infrastructure coin called Dragon Chain, DRGN. That coin right now is trading for under 30 cents, guys. And its all-time high was over $5 per coin. So, what I'm saying is, you could spend $300 right now, get 1,000 Dragon Chain, and say come August, September, when our bull market is actually, we're in full swing, hopefully, with any luck, and we're seeing like new all-time highs and, those prices skyrocketing again, your $200-300 could easily turn into $1,000. Easily. But that's just my opinion, guys. That's just my opinion. I honestly believe that like the prices that we're seeing right now, over the next year or so, will be the lowest you ever see these prices again. And then, if you miss the boat now or within the next, I'd say 6, 8, 12 months, if you're not on board, guys, you might as well just kiss it goodbye, because we'll never see prices like this again. Once there is widestream adoption, and the average citizen, be it American, Korean, Venezuelan, Mexican, Spanish, once everybody knows and has heard of the blockchain and Bitcoin and cryptocurrency, you can bet that the price that you're seeing right now, they'll just be shattered. They will absolutely be shattered. But guys, that's going to do it for the video today. If you're still with me after all this time, please do hit that subscribe button. And if you learned anything new, hit that like button. Share it with a friend. And as always, guys, I'd like to thank you very much for watching, and I'll see you in the next one. Peace.